Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in this special video, we are going to be decoding for you the TCS Q4 earnings. Remember, the biggest bellwether of the IT sector, the largest software maker in India, has come out with the earnings and has kick-started the Q4 numbers. It's closed FY24 on a positive note. We have seen that the net profit has beat large estimates on the street. The revenues up 3.5% odd on a year-on-year basis. We've also seen that when we talk about the net profit, it's come in at 12,434 crore rupees. On a year-on-year basis, this is a 9% surge. And when we talk about the kind of sales figures that we have seen, that has also seen an improvement from the last year and the last quarter as well. In fact, the thing to note over here is that the margins have come in at a 3-year high at 26%. That's an improvement sequential basis of 100 basis points on that front too. So revenues are at 61,237 crore rupees, or a 1% constant currency jump on a Q-on-Q basis is what we've seen. The other important factor as far as the deal win is concerned, which have now come in at a record level of $13.2 billion. And of course, with this, the entire fiscal year's deal win also stand at record for TCS as well. Let's welcome our guest on board. We do have Mr. Omkar Tansakle, who's the senior research analyst at Axis Securities, now joining in to help us really decode the earnings for you. Your first word, Omkar, first on the earnings front. Is it as per or largely in line with your own expectations?
Yeah, I mean, on the revenue side, we were expecting around 1.5% of the revenue growth. They came at 1.1, so it was largely in our expectations. It definitely beat on the margin front. On Q-on-Q basis, TCS being a master execution master and proven its capabilities and managing its operating expenses quite efficiently with the larger volumes, and we were expecting the revenue margin expansion of around 75 basis points, but it was a definitely beat. And also we were expecting around $7 to $9 billion deals for the quarter, but it came at 13.2 billion, which proven to be the growing demand for IT services as a whole, over the longer run horizon.
Okay, talk to us about the margins at 26%. How do you assess those, and going forward from here, since the company has now announced that they will be also giving out double-digit hikes for the top performers starting 1st of April as well. How do you see the margin outlook for the company going forward? Is that going to be an important metric?
Yeah, definitely. I mean, the margins are likely to be, a very important metric. As the demand is, in skeptical, and because of the uncertainties, especially from the North America, because UK and Europe stood as resilient as compared to the US, but it is a larger contributor to the revenue side. So being an you have the parity, you are not a parity in your hat, so you have the only thing that has to manage is your employee expenses and your the operating expenses in terms of employees, but reduced subcontracting costs and on-site expenses help them to gather some margin improvement for the quarter. So we believe they have the margins of 26 to 28% vision for FY25 and going ahead. So I believe its long-term margin guidance will likely to be continued as TCS is managing the expenses quite well. So I believe 26 to 28% will be the margin one should be looking for. And as demand grows up and back to the action, they might be seeing some margin pressure going ahead. But I believe in the current period for quarter or two, we can expect some margin improvement and reduced attrition, which came at around 12%, 12.5% for the quarter, which also indicating that supply side constraints are easing out for the quarter.
Okay, so attrition levels in a comforting zone, but the full year headcount has fallen for the first time in 19 years for the company, and from the time that the company got listed in 2004, and TCS has said that its headcount has declined by 1759 quarter on quarter in the fourth quarter, and for the financial year it has declined by 13,249 employees as well. How do you foresee this? Perhaps this was one reason why the margins did get an uptick of 100 basis points also in trade in this quarter as well. Do you see the declining trend on the employee adding count front to be continuing trend going forward?
Yeah, it might, impact of maybe over a quarter or two, but I don't think it's a long-term phenomenon because, even during the challenging time, TCS is being, delivering continuously. And they are also gathering a lot of contracts and the TCV deal wins on their order book. So I do not see the business is going down. Did not hear any of a contract cancellation or any order has been cancelled out during the challenging times. But
Hmm.
we have, the worst was behind now, and we might see a revival for in FY25, largely onto the H2 in H2 FY25. But I do not see an threat. It can be, a little bit of adjustment in terms of employees and easing out of supply side constraint, which was there during the COVID times, which was
Hmm.
aggressive. All the IT services companies were aggressive in hiring, but I believe it's now settling down a bit, and I believe the demand will, as you know, the demand grows up in H2. The company is likely to go stronger on hiring front.
Right. As far as the segmental performance is concerned, how have you assessed the kind of performance we've seen in the traditional businesses like BFSI versus the new age businesses like digital, for example? Where do you see promise and where do you see underperformance?
See, three business verticals. BFSI was hampered a lot, and the second one was communication, and third one was high tech, which was hampered a lot, largely from the North American side, and especially from the for these three verticals. However, manufacturing, retail, utilities, automobile, healthcare, and life sciences have done extremely well. Even for this quarter as well, utility, manufacturing, and healthcare and life sciences have reported a strong revenue growth. Will likely to outperform. Now it is being very important to see the management commentary, how they interacting with the BFSI, because in the previous quarter, the management indicated that they have seen some green shoots in the BFSI part. So
Hmm.
might be you can see a revival or ramping up the deals that they have won in the previous quarters. So might impact positively in the forthcoming quarters as well. So it is very important to see a management commentary and outlook on the vertical side of these three large verticals.
Okay, and geographical performance minus the BSNL update, we still find that the North American markets were subdued. Do you see continued pain here for some more time to come?
Maybe we can see some time for maybe a quarter or so, but definitely, as you know, if federal start controlling its inflation rates, and we can expect some rate cuts and maybe the revival of the IT sector as a whole, because you can see a Nasdaq which have been all the tech stocks, and where these companies are getting the contracts from have reported is stronger revenue growth. So might be, and the IT budget. So we can expect some revival in those. So we can expect some part of the revival, but it will take some time, not on a complete turnaround on immediate side. But definitely in a quarter or so, the things might get settled down, and one can see a revival largely onto the H2 side.
Okay. Lastly, tell us, Omkar, how do you expect the stock to react right ahead of the earnings? The stock did inch up higher towards the closing minutes of the trade, above 4,000 odd levels. Looking at these earnings, where do you think the stock is poised?
I believe stock is being positively, well placed, and up to the valuation part. I do not see any immediate revival in the overall demand scenario, but I believe TCS is being proved as an execution master in it. They have the strong engagement with the clients even during the challenging times. They have the large accounts on one of the top enterprises in the world. So they have the engagement and they have the technology experts. They are doing investing in newer age technologies like GNI, cloud transformation, data analytics, such might one can see and revival in a whole. But I believe in such kind of a scenario, TCS is have performed well in terms of execution at their current juncture, because managing at such a large scale has become difficult. So I believe the stock to be perform positively with a 2 to 3% gain from Monday itself, and one can expect. And if the commentary looks to be positive in these three vertical, and any revival in the outlook, or say if they are seeing some revival in the or visibility in the overall demand scenario, especially from the North American side, might be revival of the sector as a whole, and one can expect the reiteration in valuation.
Okay, fair enough. Well, thanks a lot, Omkar, for being with us on the show and helping our viewers really understand the fine print as far as the earnings are concerned. All eyes will be on TCS stock on Monday, but basis the kind of earnings that have come about, Omkar believes there could be, a continued momentum on the upward side as far as TCS stock is concerned. 2 to 3% of a move is what he's expecting over there. So keep an eye out on TCS earnings, and meanwhile, we will get to you all the expert voices and views as far as the largest IT services, software services company is concerned, and the kind of earnings they have posted. Many thanks for tuning in onto this special.
These are the posters that have been put up by the DMK functionaries, and it says, please scan to see the scams. That is what the poster says, and it also has an image of the Prime Minister here, and there is a QR code. And now